Everybody checks stocks and crypto, but this week, the real story was the currency and metals markets screaming at us first. When the dollar strengthens while gold and silver get hammered, that usually means markets are repricing risk and not celebrating calm. In this video, we'll break down what actually moved markets, how stocks and crypto are answering, and what key levels you must watch next. Hello, everyone, and welcome back to Strategic Markets. And joining us for our end of week session. We have some very interesting news events that happened throughout the week that we'll summarize for you today. Initially, the one starting off with the dollar DXY rebound. So we had some events that made, you know, people have trust back in the DXY to think that the dollar will definitely get some strength. And that was shown on the charts over here, as you can see on the daily, just a brief summary that the DXY moved back up again. Now, it's not very certain as to why people are believing in this particularly happening, but they do have something to think that with Kevin Walsh being put as the next Fed chair in May, there were some concerns thinking that even though initially he might look at rapidly lowering rates, he has taken a bit more of a hawkish stance. He might choose to take a bit of a hawkish stance moving forward, depending if inflation remains sticky and the productivity gains from AI and other things might not materialize. So there's definitely, obviously, this is not the main signal as to why that may be occurring, but there's these discussions that are happening that's bringing a little bit of caution and uncertainty into the market and causing the DXY to move. The other interesting piece of story that we have, and obviously this is on everyone's mind, is gold and silver just doing some really nice theatrics. I mean, if you just have a look over here, gold had this massive correction last week, but actually held reasonably well, just above the 5K level. So it was showing some type of strength. Silver, on the other hand, just kept retracing, which is a very interesting thing about markets trying to reprice risk. We're going to have a bit of discussion today, and Steve's going to have a bit of a chat because when we say what kind of signal the markets might be missing, it might be that there is still some risk that the markets are willing to take relevant to some commodities, but others that are still a bit high risk, the markets are just kind of not feeling it and they're kind of losing a bit of faith on that. So I'll leave that to Steve to discuss a little bit down later on in the video. Another very interesting thing is that Trump has signed the spending bill that ends the 4-day government shutdown. So this is something we all were a little bit worried about because last time the government shutdown was about 40 days plus. So in this particular case, it just ended in 4 days. That means liquidity is back in the market. That means we get our CPI, and all other types of government data that we rely on to see whether the country is doing better or not. So, considering that the government is operational, that's generally a pretty much of a good sign. That is where we are at with relevance to how the markets are moving with metals and as well as your dollar strength, and also a little bit of volatility in our traditional safe havens. I think the other aspect that we really love is crypto. And what has crypto showed us this particular week? And this is a pretty interesting thing that Steve will cover as well, is there is some relief that we're getting. And basically, Bitcoin has found its strength shortly after its 50% drawdown. So we know a couple of months back, Bitcoin, I think in November last year, hit 126,000. Now it's come back to test the midway point for that, which is somewhere around 68, 64,000. So it's definitely tested that, and how it proceeds ahead is going to be a very interesting story. What does that mean for risk on scenarios? I think we can be very certain that the risk on side of things is still showing a bit of weakness, because you can see over here, ETH BTC, I believe, is a perfect chart, which is Ethereum's strength against Bitcoin. And you can just see over here that even though on this green trend on this green trend line that was initially acting as resistance, now acting as a little bit of support, right now it's just holding a support. So even though we might have broken up above it, we still haven't definitively started moving up yet. So to me, it actually doesn't look like we are going risk on anytime soon, and this is like the best time to be thinking about taking positions on risk side, but obviously not financial advice there. So at the end of the day, crypto is confirming what FX and metals already signaled. Markets are still debating risk, and we're currently not at a riskless behavior at all. So on that, I will push it over to Steve and see what his thoughts are.
All right. Well, thank you very much for that. Whilst you were talking about Bitcoin and being on that topic of current cryptocurrencies right there, we may as well start at that particular point in time. So, as you were alluding to, we've had that 50% drawdown. So let's draw that on the chart itself directly by taking a look at the height of what's been going on there. Now, mind all of his other little notes and everything like that as well too. I thought I'd actually deleted all of those, but obviously not. Uh, but that's a-okay. So if we actually take a look at dragging it down, you can actually see about where that 50% retracement is. So let's just draw that in quickly. So we can do that, and then we'll switch back to the daily. Okay. So now you can actually see exactly, say, where that 50% retracement is around about the 63,279
Mhm.
level or thereabouts. Doesn't have to be exact overall there. If you want to go to exacts, feel free. But overall, coming down to that level there, you can see exactly or thereabouts where, we'll enlarge that, but where it's actually come down to and where it actually opened at the base of that green candle.
Mhm.
Fascinating, isn't it? Okay.
Mhm.
So you can see that there. But what's more interesting in relation to it all, and something probably the markets have missed as well in terms of a signal, is where the lagging indicator has bounced directly off, exactly at that 50% line. So 50% retracements do occur with BTC, just like that particular X poster that you actually put up a few moments ago had actually stated.
Mhm.
Fibonacci retracements, all of those kind of things there, these do come into play. So very, very interesting in relation to all of that. So bouncing off those areas there. So that is the case there. Now to avoid any more garbage on the charts, we can delete that very quickly. But it's bounced off that. Now it also aligns very, very interestingly with a price support resistance line from April of 2021. Long-term support level overall there, bouncing off there. There's another support level that actually bounced off in terms of the wick, but we won't worry too much about that. The body of the candle is more important in relation to this one here, as you can see. Now it's bounced off there and it's bounced back up as well to that price support line that we were actually talking about in Wednesday's area as well. So it's bouncing up towards all those areas and bouncing back around. Now people might want to be getting long at this point in time. That's entirely up to them as well too. Technical analysts like to look at things in terms of confirmation. So what they'll basically want to look at is seeing where it comes back down to and then where it actually bounces back up to as well. And then waiting for that confirmation to go ahead. There's a lot of overhead still going along here. Same situation when it comes to Ethereum. Bounced off a certain area there, bounced back to a support resistance line from April of 2025. That's that area back here at 1816. These are the kind of things to look for overall. Like you mentioned, levels. Levels are really important. So overall, taking a look at where levels go is vital. Let's have a look and see. It's bounced off that level, bounced back up to the level, and that's where we're sandwiched in at the moment. What may most likely occur, and obviously you see from the lagging indicator here as well, it's bounced those levels too. What may most likely occur is you see a little bit of sideways action before it determines which way it goes one way or the other.
Mhm.
Now, why are we seeing these bounces and everything there? Well, if you look at the weekly here, we're not talking about a 50% retracement in Ethereum. The
Mhm.
high for Ethereum was 4,955. We've gone way below 50%,
Way below.
way below. Okay. So overall, we're talking, probably about a 75% retracement, really. Okay.
Mhm.
Now, I can't remember the Fibonacci numbers off the top of my head, but there might be one of those as well there too. Either way, it doesn't really matter. But it's finding some support here. Wait for a confirmation would be a suggestion, okay? And have a look and see what it does from here. But either way, we're still in a downtrend. You'd need a confirmation one way or the other to be able to say that you've got something moving that you can work with and then have a plan. But why are we actually seeing a bounce overall there too? Firstly, you've got a 50% retracement. That's one thing. Secondly, take a look at BT. Now, does this look something familiar to what we were looking at previously during the week or over the last couple of weeks?
Mhm.
Okay. If
Yeah.
it doesn't ring a bell, have a look at this. Okay. What I'm trying to allude to is have a look at the options market in relation to all of these kind of things there. What I'm saying is the options market for BT, now BT is the inverse ETF of Bitcoin. The options
That
for BT,
generally, to summarize for the people who don't know what BT is, that means that uh, it's a short instrument in which if people buy this, what they're saying is basically the price of Bitcoin is going to go down. And
Ah,
the more that this BT goes up, which means more people are wanting to short it and make the price of Bitcoin go down. Correct?
correct. And it's in the name at the top there on the left-hand side as well. So as
Mm,
BT goes up, Bitcoin goes down. As Bitcoin goes up, BT goes down. Precisely it. And
mm,
people invest in this as an exchange traded fund.
mm,
Exactly that. This gave signals. This was going absolutely nuts during the week. Okay.
mm,
But what was more important was the options volatility in this particular instrument. It was going crazy, very much the same way that silver's option volatility was going crazy up at this particular point here before it went ballistically down.
mm,
Okay? Now, if you're interested in the discussion on this recently, before silver went down 30% in one day, I'll put a link at the top in terms of a card, and you can have a listen to the discussion of that before the silver crash of one day actually happened as well. Okay, so have a listen to that too. But the clues were actually there, and this is exactly what's actually happened in recent times as well before this rebound in Bitcoin. Interesting stuff. But have a look at those kind of things there too as clues. Now you were also alluding to DXY. What's going on with DXY? Interestingly, it looks as though it's finding support around the baseline. So there is a little bit of strength coming along here, but obviously we need some extra confirmation there as well, because it really hasn't resolved its way one way or the other as such there. But another interesting signal, alluding on from what we were discussing midweek as well, that the market has not really mentioned much about overall, apart from, I suppose, Dow Jones, is the Dow Jones itself. We were talking about this midweek. Put another mention of this on the cards as well, if you like, as well too. But in terms of the midweek situation with the Dow Jones, we were talking about this in terms of the moving averages. Moving averages were starting to swing upwards in relation to this. And then look what happened on Friday. Up it popped, okay? Made the major headlines in terms of things there. But something the markets did not really mention too much was the Russell. The Russell did the same in terms of things on Friday, but also in relation to what was going on with our good old friend, the bonds.
mm,
Okay. Now, the bonds have actually risen towards the end of the week. As we were talking about, as bonds rise, interest rate yields go down.
mm,
They're directly or inversely directly related, I should say, in terms of the way the Russell performs, because the Russell is dependent in terms of low interest rates.
mm,
They borrow a lot of money in terms of the small caps. So that's something there. But what's even more interesting, and something else the market might be missing in terms of a signal, is in relation to what's going on with the SPY and also what's going on with the Qs. We were talking about earlier in the week, in terms of the SPY, some weakening aspects there. That appears to have reversed quite nicely, at least towards the end of this week so far, bouncing off the cloud. That's a good positive. And also the lagging indicators coming back up through the price. A good positive there. So everyone's going, woohoo, everything's wonderful. Okay, that's great. But what about the Qs? You'd be expecting the same thing with the Qs, right? Hasn't really come up through the cloud for one point. So we've got some negativity going on there. But look at the lagging indicator. That's not even anywhere near the Tenkan Sen or the baseline as yet. It's still to the negative side of all of that. So we've got some relative weakness in terms of the Qs compared to the SPY, compared to the Russell, compared to the Dow. So it looks as though we've got some rotation more than anything else heading towards the big caps and heading towards the small caps as well, as long as we've got the continual action in relation to bond yields at this point in time. Should the bond yield situation change, this is just in terms of mere observations about what's going on with the charts, then we may see the small caps also change in relation to that. So I'll stop sharing here at this point. So you've already seen what's going on with the charts. But as Yash alluded to before, the levels are really, really important in relation to what anyone's doing. What does that mean from the perspective in relation to, say, long-term investors, conservative investors, and aggressive investors? Well, in terms of long-term investors, obviously the same narrative as what we've been discussing in the last few videos. Look at your plan. Has anything changed in relation to your levels or anything along those lines there? For conservative and aggressive investors, well, obviously the suggestion would be to take a look in relation to those kind of levels that we're talking about throughout all of those charts there, and then also basically having a squeeze at all of the aspects in relation to all of those factors of the sectors that are going on and any changes that might be going on there to take a look at any opportunities that are happening there. With that, my friend, I'll pass it right back to you.
Thank you, Steve. Look, this week's violent dollar rebound and metals reversals shows that the markets are still negotiating risk versus uncertainty. And we can clearly see that because at the end of the day, things like the Dow, things like the Russell, they're making their moves up, while gold and silver and many of the other things are showing a little bit of corrections on their side, especially crypto as well. So that risk and uncertainty seems to be running rampant. The next leg depends on whether the risk appetite rebounds or it continues to fade. And do us a favor, comment DXY, gold, or crypto to let us know what you think leads next. But other than that, this isn't financial advice. It's just how we think about the markets.